Hey everyone, so you've been doing your homework on AI in banking, right? White papers, research reports, articles, the whole shebang, and we are here to help you break it all down.
That's right. We're going to go on a deep dive together and see if we can't figure out just how AI is going to revolutionize banking as we know it.
Exactly. Now, I was looking at some research from PwC, and they're predicting AI could add a mind-blowing $15.7 trillion to the global economy by 2030.
Yeah, $15.7 trillion. That's a hard number to even imagine.
Right. What would that kind of growth even look like in real life?
Well, we can get a sense of the scale by looking at what Edmund Lau from the Hong Kong Monetary Authority has been saying.
Okay, what's he been saying?
He's been highlighting AI as a massive disruptor in the financial world, even calling it a critical part of their national strategy.
Makes sense when you think about it. Hong Kong is a global financial hub.
Absolutely, and their financial sector could see a whopping 26% GDP boost thanks to AI.
26%. Wow. Now that's a number I can grasp a little better.
It puts things in perspective, right?
For sure. Especially when you consider that banking makes up 40% of financial services jobs there and contributes a huge 63% of the sector's GDP.
Yeah, AI's potential impact is massive, no doubt about it. But before we get ahead of ourselves, let's make sure we're all on the same page here.
Okay, back to basics.
Yeah,
What exactly are we talking about when we say AI?
good point. You hear it everywhere these days, but it can be a bit of a mystery.
Like a black box?
Exactly. At its core, AI is about machines trying to be as smart as humans.
Mimicking human intelligence.
Right. But there's so many different ways to do that.
So it's not just one thing.
Nope, not at all.
Yeah.
Some AI systems are all about following pre-programmed rules, kind of like a recipe.
And others are more free-flowing, figuring it out as they go.
You got it. That's where things get really interesting, and that's where data comes into play.
Data. How so?
Think of data as the fuel for these AI systems. It helps them learn and adapt.
So the more data they have, the smarter they get.
Exactly.
Right.
Data helps them make predictions, identify patterns, even make decisions.
Wow, so it's like AI is a student constantly learning and getting smarter.
Perfect analogy.
And in banking, that student can be put to work on all sorts of things.
Oh yeah, everything from customer service to risk assessment, you name it.
I was reading that white paper we mentioned earlier, and it talked about 4 main ways AI is being used in banking.
You're talking about the one that starts with ChatGPT, right?
Yeah, ChatGPT. What exactly are banks doing with that?
Well, think about all the policies a bank has for loans, investments. Everything ChatGPT can help analyze and compare all that,
So it could help customers understand their options better.
right? It can also assess risk, like figuring out how much life insurance someone needs.
That could be a lifesaver for people trying to navigate all those complicated financial products.
Absolutely. And get this, ChatGPT can even automate some of the underwriting process.
Really? Like what kind of stuff?
All sorts of things, data entry, document classification, things like that.
So that frees up human underwriters to focus on the trickier cases.
Exactly. Another big area where AI is making waves is fraud detection.
How so?
By looking at social media claim data, even customer interactions, AI can spot suspicious activity in real time.
Wow, so it's like a digital detective on the case.
You could say that. It can see patterns and red flags that humans might miss, helping banks protect their customers and their bottom line.
That's incredible. What else is on that list of use cases?
Well, there's claim risk scoring, which basically using AI to predict how likely someone is to file a claim.
So it helps insurance companies understand and manage risk.
Exactly. And the last major use case is personalized recommendations.
Like what?
You know, AI analyzes a customer's history, their goals, their risk tolerance, and then suggests specific products and services that might be a good fit.
That's actually super useful. I mean, there are so many financial products out there, it's overwhelming.
It is, and that's where AI can really help cut through the noise and offer some personalized guidance.
So AI isn't just about making things easier for the banks, it's about making things better for us, the customers.
Exactly, and there's definitely room for improvement. PwC found that a whopping 82% of customers in Hong Kong experience frustrations with their banking.
82%. That's a lot of unhappy customers.
It is, and it just highlights how much potential there is for AI to make banking a smoother, more personalized experience.
Okay, so we've got all these potential benefits, but how do banks actually make it happen? How do they put these AI solutions into practice?
That's the million-dollar question, and it's not always easy. Traditional banks often have these really complex systems that are hard to change.
So you can't just buy some AI software and flip a switch.
No way. It takes a lot of planning strategy and a deep understanding of both the technology and the banking business.
So there are some hurdles to overcome.
Definitely. One of the biggest ones is what we call explainability.
Explainability, what's that?
It means that sometimes AI can make decisions like rejecting a loan application without being able to clearly explain why.
Okay, so that's a
Huh.
problem.
Huh.
How are you supposed to trust a system if...
Exactly. And it's not just about trust. Regulators are starting to demand that banks can explain how their AI systems work, especially when it comes to things like lending.
So banks need to find a way to make these AI systems more transparent so we can understand the logic behind their decisions.
Absolutely. And that's not always easy with some of these complex AI models. It's a whole area of research in itself.
Okay, so explainability is one challenge. What else are banks struggling with?
Resources are a big one, mainly talent and data.
Right. You need the right people to build and manage these AI systems, and that's not easy to find.
It's a tough market out there. Everyone's looking for AI experts.
Yeah.
And then there's the data itself.
What about it?
You need tons of it to train these AI systems effectively, and it often needs to be cleaned, formatted, and anonymized to protect people's privacy.
So it's not just about having a lot of data. It's about having the right kind of data prepared in the right way.
You got it. And speaking of regulations, that's another major obstacle for AI in banking.
Because governments are still figuring out how to regulate AI, especially in such a sensitive industry.
That's right. The rules are constantly changing, and banks need to keep up, which can be expensive and time-consuming.
So explainability, resources, and regulations. Three big challenges for banks trying to implement AI.
They are. But even with all those hurdles, many experts believe that the potential benefits of AI are just too big to ignore.
We talked about those benefits earlier, things like improving customer experience and streamlining operations. But how can AI actually save banks money?
Think about all those manual, time-consuming tasks that bank employees do every day, things like reviewing documents and processing transactions. AI can automate a lot of that.
So it's like AI is an efficiency machine, helping banks do more with less.
Exactly. And it can also help banks manage risk more effectively by analyzing tons of data to identify potential problems early on.
And of course, personalized recommendations can help banks sell more products and services, which means more revenue.
Right. So it's a win-win for both banks and customers, potentially, at least.
It sounds like implementing AI successfully requires a very careful and strategic approach.
Absolutely. That's where frameworks like the one McKinsey put together can be helpful. They break down the whole process into 6 key steps.
Okay, 6 steps. What are they?
First, you have strategy, which is all about defining your goals for AI.
Makes sense. You got to know where you're going before you can figure out how to get there.
Exactly. Then comes planning, which is about developing a detailed roadmap for implementing that strategy.
So figuring out the specifics, the timelines, the budgets,
Right. And then there's ecosystem, which is all about recognizing that you can't do it alone.
partnerships.
Right.
Yeah.
Exactly. You often need to partner with other companies to get access to the best AI solutions data providers, even other banks to share knowledge.
Well, it's about collaboration, not just competition.
Exactly. Then you have development, which is the actual building and training of your AI system.
This is where the data scientists come in, right?
That's right. They're the ones who create the algorithms and the models that power AI.
And then deployment, which is about integrating those AI systems into the bank's existing systems.
Right. And that can be tricky, especially for older banks with outdated systems.
Sounds like a delicate operation.
It is. And finally, you have operate and monitor, which is about making sure your AI systems are running smoothly and doing what they're supposed to do.
So it's about ongoing maintenance and oversight.
You got it. It's about recognizing that AI is a journey, not a destination.
Speaking of journeys, let's shift gears a bit and talk about what all of this means for the future of banking.
The future of banking with AI at the helm. That's a fascinating question.
I'm ready for a sneak peek. What kind of changes are we talking about?
Imagine a bank that's totally personalized. It knows what you need before you even ask.
Like it can read my mind.
In a way, yeah. It's about using data and AI to create a truly tailored experience.
So no more generic one-size-fits-all advice.
Exactly. And imagine transactions that happen instantly, loan applications that are approved in minutes, customer service that's available 24/7.
Wow, that sounds amazing.
Yeah.
It's like banking on warp speed.
It is. AI can make banking so much faster, smarter, and more customer-centric.
But what about all the people who work in banks? Will they all be replaced by robots?
That's a question a lot of people are asking. And while it's true that AI will likely automate many jobs, it's unlikely to completely eliminate the need for human workers.
So it's not about AI versus humans. It's about AI and humans working together.
Exactly. The key will be for banks to invest in training and upskilling their workforce so they're ready for this new AI-powered world.
Instead of fearing AI, we should see it as a tool that can help us do our jobs better and more efficiently.
That's the idea. And it's not just about technology, it's about people and processes too.
And about vision. Banks need to have a clear vision of how AI can transform their business and create a better future for their customers.
Couldn't have said it better myself. And that vision needs to be grounded in a deep understanding of what AI can and can't do, both the good and the bad.
Well, we've definitely covered a lot of ground today, but there's still so much more to explore.
There is. In the next part of our deep dive, we'll look at some specific examples of how AI is being used in banking right now, from robo-advisors to fraud detection systems.
I'm looking forward to it. Stay tuned, folks, for more insights into the world of AI in banking.
Mm-hmm.
Okay, so we've laid out the big picture of AI in banking, right? The potential benefits, the challenges, the roadmap for implementation. But what's really pushing banks to jump on this AI train?
Well, there are a few big reasons, and they all boil down to making banking more competitive and, ready for whatever comes next.
Okay, let's break those down.
First and foremost is making customers happy, improving that customer experience.
Right, we talked about those frustrations that 82% of customers in Hong Kong are dealing with. And it's not just Hong Kong, it's a global trend.
Exactly. Banks know they need to up their game.
We're all used to these smooth experiences with companies like Amazon, Netflix.
Oh, yeah.
We expect the same from our banks.
Exactly. And that's where AI comes in. Personalization, smooth digital platforms, AI-powered chatbots.
Making banking more like what we're used to in other parts of our lives.
Right. But it's not just about keeping customers happy. It's about keeping the banks themselves healthy.
The bottom line, right?
Exactly. That's the second big driver, cost effectiveness. Traditional banks are feeling the heat to streamline their operations, cut down expenses, especially with these virtual banks and fintech startups popping up everywhere.
Oh yeah, those disruptors shaking things up.
Exactly. AI can be a huge help with that. Think about all those tasks that take forever and tons of manpower. AI can automate a lot of that.
So it's not about replacing humans, it's about helping them be more efficient.
Exactly. It's about letting people focus on the stuff that really needs a human touch.
Okay, so happier customers and leaner operations.
Yeah.
What's the third big driver?
Risk management. Banks are all about managing risk, right?
Makes sense. They're dealing with our money after all.
Exactly. And AI can be a real game changer here, analyzing massive amounts of data in real time to spot risks that humans might miss.
So AI is like a super-powered security system always on the lookout for trouble.
That's a good way to think about it. AI can be used for all sorts of things, from spotting fraud to assessing creditworthiness, even cybersecurity.
Wow. So we've got the drivers, better customer experience, cost effectiveness, and risk management. Pretty compelling reasons for banks to get on board with AI.
Absolutely. But as we talked about earlier, it's not always a smooth ride. There are some bumps in the road.
Right. Those three big challenges, explainability, resources, and regulations. Let's dive a little deeper into those.
Let's start with explainability. This is a tricky one, especially with these deep learning algorithms.
Deep learning, the stuff that's inspired by the human brain, right?
Exactly. It can do amazing things like image recognition and natural language processing, but sometimes it's a bit of a black box.
So we know it's making good decisions, but we don't always understand how.
That's the problem.
Yeah.
And that can be a big issue in banking where trust is so important.
Imagine being denied a loan and having no idea why. That wouldn't exactly inspire confidence.
Exactly. And it's not just about customers either. Regulators are getting more and more interested in this. They want to know how these AI systems are making decisions, especially when it comes to things like lending.
So transparency is key.
Absolutely. And that's not always easy to achieve with these complex AI models. It's a whole field of research in itself.
Okay, so explainability is a big one. What about resources?
Resources are another major hurdle, especially talent and data.
Right. Finding skilled data scientists and engineers is like trying to find a needle in a haystack these days.
It's a tough market. And then you need to train your existing staff to be ready for this AI-powered future.
So it's not just about bringing in new people, it's about upskilling the people you already have.
Exactly. And then there's the data itself. You need mountains of it to train these AI systems properly.
Data is like food for AI, right? The more it eats, the smarter it gets.
That's a great way to put it. But getting the right kind of data and preparing it correctly, that's a challenge in itself.
It's not just quantity, it's quality too.
Exactly. And then, of course, we can't forget about regulations.
The ever-changing world of regulations.
Right. That's one of the biggest headaches for banks when it comes to AI.
Because governments are still trying to figure out the best way to regulate AI, especially in a sensitive area like finance.
Exactly. The rules are always evolving, and keeping up can be a real struggle.
So we've got explainability, resources, and regulations. three big hurdles that banks need to overcome.
They are. But even with all that, many experts believe that the potential benefits of AI are just too big to pass up.
We've talked about those benefits, things like better customer experience, more efficient operations. But how does AI actually translate into saving money for banks?
Think about all those manual tasks that eat up time and resources in a bank. AI can take over a lot of that.
So AI is like a super efficient worker, never gets tired, never takes a break.
Exactly. And it can help banks manage risk more effectively, too, analyzing tons of data to spot problems before they even happen.
And of course, there's the revenue side too. Personalized recommendations can help banks sell more products and services.
Right, so it's a potential win-win for both banks and customers.
It sounds like implementing AI successfully is a real balancing act.
It is. You need a clear strategy, a solid plan, and a willingness to adapt.
And that's where frameworks like McKinsey's six-step approach can come in handy.
Absolutely. They provide a roadmap for banks to navigate this new world.
Okay, remind me what those six steps are again.
Sure. The first is strategy defining your goals for AI.
What do you want to achieve with this technology?
Exactly. Then comes planning, creating a detailed roadmap for making that strategy a reality.
So getting down to the nitty-gritty, the timelines, the budgets.
Right. Then there's ecosystem, recognizing that you need partners to succeed.
You can't do it all alone.
Exactly. You need to build relationships with tech companies, data providers, even other banks to get the most out of AI.
So collaboration is key.
Absolutely. Then we have development, which is where you actually build and train your AI system.
This is where the coding and the algorithms come in, right?
Exactly. Then there's deployment, integrating those shiny new AI systems into your existing operations.
Which can be tricky with all those legacy systems.
It can be. And finally, you have operate and monitor, making sure everything is running smoothly and doing what it's supposed to do.
So it's an ongoing process. You don't just set it and forget it.
Exactly. AI is a journey, not a destination.
Speaking of journeys, let's talk about what this all means for the future of banking.
The future of banking. What will it look like with AI at the helm?
Give me a sneak peek. What kind of changes are we talking about?
Imagine a bank that knows you inside and out, anticipates your needs before you even realize them.
Like you can read my mind.
Almost. It's about using data and AI to tailor the entire banking experience to you.
So no more dealing with those annoying one-size-fits-all solutions.
Exactly. And imagine instant transactions, loan approvals in minutes, customer service that's always available.
That sounds incredible, like something out of a science fiction movie.
It's the future of banking, powered by AI. Faster, smarter, and more customer-centric.
But what about the people who work in banks now? Are they all going to be replaced by robots?
That's a question a lot of people have. And while it's true that AI will automate many jobs, it's unlikely to completely wipe out the need for humans.
Well, it's not about AI versus humans. It's about finding ways for them to work together.
Exactly. Banks need to invest in training and upskilling their workforce so everyone's ready for this new era.
So instead of being afraid of AI, we should see it as a tool that can help us do our jobs better.
That's the idea. And it's not just about the technology, it's about the people and the processes, too.
And having a clear vision of what you want to achieve with AI.
Absolutely. You need a roadmap and a guiding principle.
Okay, so we've talked a lot about the theory and the strategies behind AI in banking. But let's get down to brass tacks. How is this actually playing out in the real world?
That's a great question. In the next part of our deep dive, we'll explore some real-world case studies of AI in action, and we'll talk about some of the ethical considerations that come with this powerful technology.
Okay, let's get into some real-world examples of AI in action. I'm really curious to see how this is all playing out.
There are some fascinating case studies out there, and one that really caught my eye involves facial recognition.
Facial recognition, what are they using that for?
Some banks in China are using it to assess loan applicants.
Seriously? Facial recognition for loans. How does that even work?
It sounds a little sci-fi, right? But the idea is to analyze those micro-expressions, those tiny movements in our faces that betray our true feelings.
So like a nervous twitch or a fake smile could be a red flag.
That's the thinking. Of course, this tech is still pretty new. There are a lot of questions about how accurate it really is.
And I can imagine some people might have privacy concerns about it too.
Yeah, definitely. It raises some big questions about how much we're willing to let technology into our lives, even if it means potentially better risk management.
It's a tricky balance for sure.
Yeah.
Okay, let's move on. What about robo-advisors? We talked about those earlier. Are there any banks actually using them successfully?
Definitely. There's one bank in Hong Kong that's using a robo-advisor platform to manage investments for some of its customers.
And how's it going? Are these robo-advisors any good?
So far, the results are pretty impressive. The robo-advisor, which uses machine learning algorithms, has been generating returns that are as good as or even better than human advisors.
Wow. So it's not just about cutting costs. The AI is actually making smart investment decisions.
Right. And that's leading some to believe that robo-advisors could really shake up the wealth management industry.
So are human financial advisors going to be out of a job?
It's a good question. A lot of people still prefer working with a human, especially for those big financial decisions.
Right. It probably comes down to personal preference.
Yeah.
Okay, let's talk about something else. We discussed AI automating back-office tasks, like document processing. Any real-world examples of that happening?
There's one bank that's using AI to read and analyze legal contracts.
So no more lawyers spending hours poring over those massive documents.
Not quite. But the AI can really speed things up. It can find key clauses, extract important information, and even flag potential risks.
That's amazing. It's like a super-powered legal assistant.
It has the potential to really streamline the whole process, and that's just one example of how AI can automate those time-consuming back-office tasks.
It's really changing the way banks work from top to bottom.
It is, and it's happening faster than many people realize.
Okay, so we've seen some real-world examples of AI in action. It's clear that this technology is a game changer for the banking industry.
Absolutely. But with any powerful tool, there are always things to watch out for.
The potential downsides.
Right.
What are some of the big societal and ethical questions we need to be asking as AI gets more powerful?
One of the biggest ones is the impact on jobs. As AI takes over more tasks, what happens to the people who were doing those jobs before?
It's a valid concern. A lot of people worry about AI leading to mass unemployment.
It's a possibility, but history shows that new technologies often create new jobs, even as they make some old jobs obsolete.
Like the internet. It disrupted tons of industries, but it also led to tons of new jobs.
Exactly. The key is to adapt and learn new skills. As AI becomes more common in banking, it will be important for workers to be ready for those new roles.
So it's about working with AI, not against it.
That's it. And governments, education systems, businesses, they all need to work together to make sure people are prepared.
It's about being proactive, not reactive.
Exactly. Another big thing to think about is how AI could potentially make existing inequalities worse.
No, so.
Well, if AI is trained on biased data, it can actually reinforce those biases in its decision-making.
So like if an AI system for loan approvals is trained on old data that reflects past discrimination, it might be more likely to unfairly deny loans to certain groups of people.
That's a real risk, and it highlights how important it is to use the right data and make sure AI systems are designed to be fair and equitable.
It's about being aware of the unintended consequences.
Exactly, and that brings us to the importance of transparency and accountability. The more powerful AI becomes, the more we need to be able to understand how it works and hold it accountable.
So we need to be able to look under the hood and make sure everything's running smoothly.
Right. And we need clear rules and regulations to make sure AI is being used responsibly.
It sounds like we've got a lot of work to do.
We do. AI is an incredibly powerful tool. It has the potential to reshape banking and society. But we need to approach it carefully, considering both the good and the bad.
It's about finding the right balance.
Exactly. We need to have these conversations about how we want to use AI and what kind of future we want to create with it.
Well, I think we've made a good start today. This has been a really fascinating deep dive into the world of AI in banking. We've covered so much from the technical details to the ethical challenges.
It's been a great conversation. I hope our listeners will continue learning and exploring this topic. It's only going to become more important in the years to come.
Thanks for joining us on this deep dive. We hope you found it informative and thought-provoking.
Absolutely. We hope it sparks some new ideas and maybe even some healthy debate.
Until next time, everyone.